All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Yesterday we talked about the chop, and the fact of the matter is we know that's the environment. It's one of those where that environment isn't going away. There are no real signs of the chop going away here just yet. And the chop bias is relatively bearish overall right now, according to the market vibe. Well, yesterday after the market closed, and I have a 5-minute chart of futures here. Yesterday after the market closed, we saw S&P futures make a shift. Right, they moved about 25 points as U.S. President Trump tweeted that the U.S. is going to be putting a 5% tariff on all imported Mexican goods until Mexico, shows signs that they're going to do something about the border problem. It's one of those where I was with my brother when the tweet came across, and I saw futures go, and he looked at me and he said, "Can a U.S. president do that? Do they have that much power to just be able to, level a flat tariff without Congress, without the judicial, without it?" And the fact of the matter is, yes. In today's U.S., the powers are such where that ability is there. We've seen it executed, and we have seen, whether it be Democrat or Republican president, year after year, as pretty much since FDR, come in and actually increase the reach of the executive powers. And, we continue to see that. U.S. President Trump is, doing that here with Mexico. And so we see a shift here in S&P futures. Now S&P futures. I mean, it's a 25 point shift, right? Think about that. 25 points. That's not that much. 25 points. That's just in a market like this. That's not a whole lot. Okay, and then we get S&P futures kind of rebound back a little bit as Asia opens up and as China trades, and then we see another skid happen here, and this skid happens during the European session, and we saw data out of Germany. And Germany is the biggest economy in the EU, and retail sales down. We saw inflation, not hit targets. And so more sign of slowing happening in Germany. So S&P futures reacted accordingly. And then we get the U.S. Open. And, what have we seen on these gap down days? We have seen early sell followed by late rally. That has been the absolute trend. It's not always smooth. It's not always, it's going to bottom here, or it's going to top here, and all of that. But we see early sell. And then as the day progresses, sometimes we see another sell come in or two come in here. But later day, we tend to see the markets rally. That has been the norm for the markets on the gap downs. There's nothing in the S&P futures here this morning to suggest bottom in. Or anything of that nature. So, I'm not rushing out there and saying, hey, I'm going to go buy this, that, and that, here with this move. But that's the tendency that we have seen. The market vibe remains, strongly bearish. And, that has been bearish now for a while. And, path of least resistance on the market continues to be lower with that market vibe bearish. Now, we see glimmers of change, right? We see glimmers of change starting to happen, but we don't see confirmation of change, right? And please, as I talk about, over time, as I talk about some of the possible, glimmers of change, believe me, when there's confirmation of change, I'll state that. If it's just glimmer, that's all we're talking about. So please don't take a glimmer of change and say, well, you know what, okay, I'm all in or something of that nature. But we'll eventually see a confirmation of change, but that is definitely not there right now. All right, so that's just a quick look at the market. Challenge. Bear with me for just a second. There weren't a lot of 3-7 crossovers out there this morning, but running the algorithm here right now on my other screen. See if there are any signals here. I don't expect any from what I saw earlier, but let's see. Okay, no new signals here this morning. We'll talk about some of the stuff that is moving and is happening. So we do have a position on the board that we have to deal with, and that is GLD. We bought calls on this yesterday in the afternoon session. Average true range of 78 cents. Here we have a stock exit level of 120.82 or 123.16, and so if we come in here and we put in GLD, we are at, let's see, we're at 122.70. So 122.70, and so we're about 46 cents from taking some gain on it here. GLD has a very low average true range on it right now. It's a very low average true range for it, and we're seeing GLD move outside the average true range here today, which is nice to see when that's in our direction. So the option price here, 275, is what it is going for right now. So we're up about $500 on it here, here this morning, which is nice, but definitely looking for some more. And we haven't had a trade yet that here this challenge that has gone to the stock profit level, where we take off 40%, let the rest run, readjust things. So looking forward to seeing that happen, putting that into action. If it's with GLD, great. If not, we'll do it on the next one. So that's the challenge. Nothing really too much to say about it. It's just off and rolling. We saw the bull signal come in yesterday. We see the pop up here. Is it because of fear? Is it because of the tariff? Is it because of all of that? Well, if you take a look at what gold did on the announcement from U.S. President Trump. Let's come back here to it. Right here. This is where U.S. President Trump made the announcement. And we saw gold pretty much move up 2 points. That's what it meant to gold. Right, it was a 2-point drive higher. The rest of this came during the Asian session, and now here during the U.S. Session. So this is not something that was just oh well, there was that announcement, so boom, it moved gold. No, it really didn't. It started a 2 to 3 point move, and and then we have seen. Yeah, we have seen it, move ever since. Okay, all right. Now, it's one of those here where, and I put into my note this morning. There's a lot out there this morning in terms of headlines. This is a headline writer dream morning. And if you think about the news media, what is their goal? Their goal is eyeballs. Their goal is clicks, right? That is their goal. As a trader, it's not in line with your goals. So, this is a morning where there are sensational headlines all over the place. And the words meltdown, coming into play. We've seen a few things talking about the bull market and, new highs coming in. It gets a little tough to go and say, okay, what's the actual information here out there? And the actual information is just what U.S. President Trump tweeted. We have had a member of the White House speaking on CNBC, telling investors to stay calm. Which tells me that U.S. President Trump doesn't have any intention of backing off here or saying anything to quell some of the panic that has come in. But you think about what market conditions are. You think of how fund managers have to react, right? You get another brick in the wall of worry right here, and that is what's driving. That's going to drive things here a little bit on a day that naturally is a sell day, given the fact that it's the last day of the month. The thing about what U.S. President Trump tweeted, and the imports, the tax on imports or tariff, whatever you want to call it there, same difference, is it was left pretty open ended. It was left pretty much of, well, they've got to do something, and it didn't explicitly say what Mexico had to do. It just said they have to do something, or else we're going to raise it even more. And that's that's a situation that creates more unknown, creates more uncertainty, and is something that is not going to get investors buying in. We talked about a stock like Bank of America the other day, and why Bank of America is interesting to me and the valuation range that it is in. Why I couldn't go get into it, right? Or why I had to avoid it with the option activity. It's now fallen about another $1 from where I was looking to get in, and it's even more of a compelling fundamental argument, right? But at the same time, I have to weigh that with what the conditions are, and all right, do I want to step in? Do I want to put some risk on the table here? And the reality is that with a lot of these, the way that things are shaping up, and let's just make the argument that the market closes in 5 minutes, and all these candles are going to look the same. We get candles like this here on Bank of America, followed by a gap up on Monday. That's going to lead to a lot of rebound buying. There's a lot of this kind of, exhaustion here, and so it's not one of those things where you have to go in and say, "Well, I'm just going to go buy the bottom. I'm going to try to pick the bottom, and you know what? I'm going to play the hero." That's not what it's looking for. And in fact, with Bank of America, we even talked about the CCI. And hey, the next move above 100, that's the buy point, right? Or above minus 100, that's the buy point, right? We will see the CCI move above minus 100 if Bank of America were to close here and gap up on Monday, right? And there is that potential. But it's something that can be reacted to when it happens and not anticipated as we continue to see. We talked about some of the truckers yesterday, the J.B. Hunts of the world, right? Look at J.B. Hunt holding on very nicely here today. You would think that this is some really bad news for the truckers, and you're absolutely right. Here's KNX. This is the one I would like to get into. But same scenario as Bank of America. I can wait for a gap up. Right, if it holds like this today, gaps up, the odds are significantly greater in my favor, so I don't have to go play hero here. Now, one area that I find to be very interesting in the market this morning is Brazil. Brazil has had a phenomenal last 2 weeks. It is the leading market in the world over the last 2 weeks of the major markets. And it has just been on fire. It has, it broke on down, right? Big, bad, bearish breakdown. It breaks down. It's in trouble. It's going to collapse. And whoosh. An absolute bear trap in play. Continued on rally. And it's one where I've watched it. I've kind of, it's not coming off of a higher low or anything. I haven't had a play here that I felt comfortable with. We've talked about Vale. But, you think about today and the levying of tariffs on Mexico. And you think about U.S.-Brazil trade and all of that. And you look at how Brazil is, well, if you kind of really think about the way the trade dynamics are working, it's very much a benefit to Brazil. It's very much a benefit to Brazil. It's something where, the friction between the U.S. and China, gives room for Brazil to step in. Even more friction between U.S. and Mexico gives more room for Brazil to step in. And that's, we continue to see that kind of play out here with the EWZ. I don't like it as an entry point right here. But I do think the week's action here, this week is very indicative of what's to come in the coming months here with Brazil. And I would not be surprised if we are talking about Brazil and the EWZ, pushing up into the 50-55 level. This is a monthly chart, but pushing up into that 50-55 level, over the course of this summer. And with everything that's going on, because of just the way the trade war dynamics are working, the way those winds are swirling, could be a big benefit here to Brazil. All right. Now 3-7 crossovers. There are a few out there that are on the watch list, and I promised I would show the scans here each day of the 3-7 crossovers. But before we go to the scans, let me show you the ones that were crossing over before I got on video. One of them's gold, GOLD, Barrick Gold. You know where I stand with Barrick Gold. I am very bullish on this stock, right? Very bullish on the stock, and, it's had a very kind of rough last 6 weeks, on the slide here. This is a very bullish move here today for Barrick. Now, it's not a higher low or anything like that. In fact, you can see the stochastics 39.1, even on today's move, isn't pushing above 20. That's how the stock is traded here of late as gold has dipped. And so it's, not signaling a bullish signal for the challenge here just yet, but does have that 3-7 crossover. We also see a 3-7 crossover to the downside here with Walmart, but this is kind of like Barrick to the opposite, right? Walmart's still trading in the upper end of its ranges. It's had some friction, some resistance here at 103. Some pretty hefty resistance here at 103. This is one where if it's able to kind of hold on right here and rally, it's going to rally pretty big. But you think about Walmart and you think about the tariffs with Mexico and who it's going to hit and how it's going to hit. Well, some of the cheap goods that have come out of Mexico that have been sold by Walmart, Target, other companies here in the U.S. There's some speculation those goods aren't going to be as cheap, right? What happens to the price of avocados? What happens to the price of other agricultural stuff? And so we're seeing things like Chipotle gap on down here this morning, and definitely have a little bit of reaction. But those are the 3-7 crossovers that were on before I got on video. Let's go take a look at which ones are out there now. And so let's ramp this up here. All right, there we go. And this is just for the 100K challenge watch list, and you can see it's still just Barrick Gold, GOLD with the bullish signal, and the 3-7 crossover to the upside, and if we go to looking for downside crossovers on the watch list. You can see it's just Walmart. So that's it. There are not a lot of 3-7 crossovers happening here this morning on the watch list, and the two that are happening, they're not creating signals. Now, if we go to the S&P 500, this is going to change a little bit, right? And you can see 23. These are downside crossovers right here. I believe that's how I have the scan. This scan, let's see. Yeah, so these are downside crossovers. Here with it, you can see Deere, it crossed up yesterday, today crossing on down, but these are the names that are having downside crossovers. Kimberly-Clark, MasterCard, VeriSign, Walmart's on here, right? Allstate. It's not that big of a list considering what we're seeing this morning. But the upside crossovers here this morning are definitely going to be fewer, but let's click Run Scan here. And these are the upside crossovers here for the S&P 500. McDonald's, that's interesting. Aflac, CBS, couple commercial real estate companies in here with extra space storage and realty income. Waste Management in here. So yeah, those are the 3-7 crossovers to the upside that we are seeing here in the market today. Okay, look, please, we talked about it yesterday. We talked about this idea of the market. What's happening out there is known. There is there is a ton of certainty in the market, right? And it is certainty that there's going to be news events. It's certainty of what the data is, what the economics are, what the earnings are. That's all understood, right? Fund managers understand that. They understand the time of year. They understand the chop nature of what is going on. So we can go to this Market Watch front page, and it's a whole bunch of uncertainty and a whole bunch of what ifs and who knows and all of that. But when we go to what fund managers are looking at and what the big money out there is looking at, it is very known what type of environment this is. And it's an environment where they're not going to be caught dead chasing, to the upside. And it's an environment where they're going to look to be very selective on some drops. But we're going to see rips sold. We're going to see dips bought, and it's the magnitude of rip or dip to get sold or bought is going to depend on the quality of the stock, right? We're not going to see FedEx, get just bought up and bought up and bought up by fund managers because it's oversold, right? The quality of the stock is terrible. It has shifted in such a huge way that we're not going to see that without some sort of quality shift here to the upside. But something like a Visa, right? They're not going to chase it to new highs right just yet. They're not going to, look to say, well, let's chase this to 170 yet. But man, this starts getting back down to 160, below 160. Yeah, they're going to look to step in and say, all right, you know what? This is a pretty good area to step in and run with it there. And I do expect that we will, we'll continue to see this type of action. But lack of quality on fund managers, sheets or on their trade list means they've got to get rid of it. Right, that they can't hold it. They can't make the argument to say, well, you know what, I'm going to hold FedEx because this is going to turn around and that's going to do this, and they can't do it. Right, it's just not not possible for them right now. Even some of these energy names, and we've talked about how investors have been trying to jump into energy names, and they've been doing it with options because they're not confident enough to buy the stocks, and rightfully so there. Okay. Alrighty. Well, thanks for hopping on. No changes to the challenge, here this morning. It does look like we are getting, and again, we've passed the time to make a change, but does look like we are getting, pretty close to the profit level here. So, a couple, 10 cents away, 15 cents away there from the profit level for gold. So we'll see how that shapes up here this afternoon and go from there. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.